Guys, how you guys doing? I hope you're doing fine. I hope you're doing wonderful. This is a quick video to discuss the Dow Industrial and the risk on, risk off trading. And I am starting with a 4-hour time frame for the Dow Industrial. And as I tweeted before, the disco combo, the bearish disco combo is in effect. All I need now, this is the 4-hour time frame, all I need now is for the RSI to go below 50 and it will be officially in effect, all of it. Okay, so before that happened, we have a bearish divergence where you have a high in the Dow and a higher high here, and this does not get confirmed in the stochastic nor in the RSI, especially the RSI. The last time this type of divergence took place, it was back in September. We have high, and this is not confirmed in the stochastic. Okay, good deal. Usually in the 4-hour time frame, the MACD by itself, the bearish crossover gives you a signal. Last time this happened was in 14th of October, and bad things happened. And the time before that was 18th of September, and you had a down leg, and before that you had it in September 3rd, and you had a bad leg. You could back test it. It's extremely reliable. This one you had just a brief retracement. Nevertheless, most of the times you always have retracements. At that time, you did not go below 50 here at all. So once you go below 50, the stars are aligned for a bearish move. We need this to go below 50 next week for the bearish move to happen. So is this bullish? Absolutely not. Would I buy the market? I will never. Would this save me money? Yes, it did in the past, and it's very safe not to do it. So this is the daily time frame. So what happened in the daily time frame? You closed below the 10-day moving average, which is most of the times it's bearish. You see this beautiful up move. You got over the 10-day moving average, and boom, and now you're below it. Yet the 10-day moving average is pointing up, which is beautiful. Here it was sideways, then boom, went down. So this is a down sloping 10-day moving average. Bad things happen. Up sloping moving average, price action over the 10-day moving average. It's good. So what's bearish about this picture? You have multiple bearish candles in the daily time frame, and they are here. You have a very ugly shooting star with the vaccine news. So you had two bearish candles, yet you had new high, and after that you had a harami cross, bearish harami cross, and after that you had a bearish engulfing, where you engulfed the already bearish candle, and you confirmed it, and you had bearish close today, 10 below the 10-day moving average. And for the stochastic, usually after the second try, you tried here, you went up. After the second try, when you close below 80, you had retracements. Below 80, retracement. First try, second try below 80, retracement. You could see the price action here. And every time, first try, second try, below 80, just an easy retracement. Okay, here below 80, severe retracement. First one, second one, you had an okay retracement. So it's not really good. As far as the risk return is concerned, it's not really the best beautiful bullish scenario environment, and you almost have a bearish crossover here, even though it's not confirmed. You have to have at least the stochastic had to be in 67 at least for the bearish crossover in the MACD to take place. Okay, let's look at the RSI and the daily time frame. I'm sure it's a high number. It can't be low, that low at all. You need, okay, it is a high number. It's 57. So once you go 60, 65 in the stochastic, you've got a bearish crossover here, and below 15 RSI, you will have a bearish move. So far in the daily time frame, only the Japanese candles and the 10-day moving average, yet it's upsloping. So in the 4-hour time frame, which is a shorter time frame, it's not good. It's not looking good. This is the weekly time frame, so the momentums are doing fine. Let's look at the stochastic. I think it's doing fine. Let's take a look now. All right. This is the stochastic in the day and the weekly time frame. Okay, it's not doing fine. So you have a high, high in the stochastic, lower high. When was the last time you had that? You had high, high, just a smidgen. You have a high and a lower high. And what happened after that? The rest is history. And if you are the Kareem and Abdul Jabbar, the people that watching me, usually, I don't like bearish divergences, especially in the weekly time frame. And I'm sure if history repeats itself, and it rhymes usually, bad things might happen because of this bearish divergence. So as far as the Japanese candles here, we had a doji cross right here, which is an indecisive candle, close to the all-time high. This is really not ideal. It means the forces of the bulls and the bears, they stopped. They both of them submitted. So next week after that, you have a bearish engulfing, which usually is not a happy event, especially if you are close to all-time high. So this is 29,933, and this one. Okay, so it's okay. So you made an all-time high in this week, yet you closed at the low of the week, and you eclipsed, you engulfed the body of the previous week. This is usually not beautiful times. Let me try to look. This is the closest one to it right here. So the high, it was an all-time high, by the way, at that time, 27. Okay, let me just do it again. Okay, you did not, you missed the all-time high at that time by 30 points. Yet you had that indecisive candle, and after that, a bearish candle. And you closed below the 10-period moving average, which was really bad at that time. And this induced a correction at that time. It was the trade war at that time, 2019. So before that, close to all-time high. You have indecisive candles, this one right here, even that was red. But the next week, the week after that, you close below the 10-period moving average. Here it's really far. Another thing you may notice, the price action always gravitate toward the 10-week or 10-period moving average. It goes back to it. Or the 10-period moving average catches up with it. So this was an exceptional time at that time. And we all know what happened. Now, you had almost so this is the 10-week moving average. You have over 1,000 points between the 10-week moving average and the price action. And most likely at this stage, I don't know for sure which one is going to catch up with which, but it's possible that they meet in the middle or it goes down. I really don't know. All I'm saying, it's definitely not a good bullish environment at all, at all. So we look at the dollar for the day. And the dollar confused me last week. I thought risk on, risk off will go back in business and money will go to bonds and gold. But now the money went to bonds, but not all the way to gold. So that's another confusing thing. Usually it happens. They switch on and off the gold and bonds and the positive divergence, the positive correlation. Sometimes it has a negative correlation with dollar, which is most of the times. So the dollar went up today. The market went down today, which is expected in this environment. Yesterday it went down, not that much, and the market went up 40 points as far as the industrial is concerned. So TLT, so it's very confusing yet. The risk on, risk off, it's not 100%. And this is TLT was doing an amazing job, and I was very bullish on TLT last week, and I was leaning toward the bullish scenario for both TLT and gold. Now I am neutral on both of them. Now TLT, which is the bond ETF, had positive divergence, and this resulted in a beautiful move up leg from this low right here to this high right here. Yet and today it was above the 50-day moving average, which is amazingly bullish usually. Now we are at the 200-day moving average. So in my point of view, once you clear some resistance here, gold might catch up with TLT, which is the bond market, and it became risk haven trade, yet we don't know for sure right now how the dollar would react. So we have to wait for that. So I am still neutral. I'm bearish on the market because of these bearish actions in the 4-hour time frame, daily time frame, and definitely the weekly time frame. And for the dollar, the weekly time frame, the only bullish thing that it's going for the dollar is the MACD is still in bullish mode until now, even though the stochastic is going into oversold, which shows weakness. Yet this thing is still. And usually when the moving averages, the longer term and the shorter term for the MACD get so close, Bollinger Band usually are the invisible support and resistance, and it's very close. You're very close to the lower end and further from the upper end, yet you are below the 10-period moving average and 20-period moving average in the weekly time frame. It's really no one knows for sure what's going on right now, especially where the money might go. Is it going to go to bonds and gold or dollar if the market goes down? And what's this is the VIX. Even the VIX is indecisive. Once you go over 20, you will have momentum to the upside, which in effect inversely relates to the market, and that might affect the market to the downside. That's what happened right here. This up move, this little bitty up move, and this up move, and their bullish crossover is very close. So you need the VIX to go up for 20% maybe. This will induce the disco combo, the MACD, and stochastic on the RSI. But now nothing is very clear as far as the VIX is concerned, as far as the risk on, risk off is concerned, as far as gold. Yet I can say I will never touch the equity market, especially the Dow Industrial, because of the 4-hour time frame, the daily time frame below the 10-day moving average, and the bearish engulfing in the weekly time frame that came with an indecisive candle, and the bearish divergence in the weekly, which does not happen all the time. It's the first time it happens since the major flush. I wish you guys the very best. Please like if you like, subscribe and share, and this goes forever.